Okay, good evening, everyone. Thank you very much for showing up. We will be doing our presentation of 60 units property that we under contract in Texarkana, Texas. Right now we in due diligence, the second half of due diligence. So we're looking for people who might be interested in joining us to be part of our team. And let's start doing a little bit of AI creation that we created. Let me just share my screen. And it's a 5 minutes presentation if you see it. And after that, we will go into details. Let me just start it.
Go full
Welcome
screen.
to the investment opportunity video for the Pines at Richmond. This project is a 60-unit workforce housing acquisition located in Texarkana, Texas. With a targeted closing date of September 15, 2026, the offering includes a 7% preferred return and a projected annualized return of 17 to 20%. Please note that this video is for informational purposes only and does not constitute an offer to sell or a solicitation to buy securities. All investment decisions should be made after reviewing the full offering documents. Projections mentioned are not guarantees of future performance, and investors should consult with their own professional advisors. The Pines at Richmond offers several key value drivers. This 60-unit community in the Richmond Road corridor benefits from our existing local presence and management infrastructure. Our plan focuses on moderate value-add improvements, including occupancy stabilization, curb appeal, and rent growth, all supported by attractive, assumable fixed-rate debt. Our sponsor team at Vilas Holdings brings extensive experience to this project. Roman Kirchner leads capital raising and deal execution, while Alexander Kislitsky oversees property operations and leasing. With expertise in IT, investment banking, and real estate, our team is positioned to execute the value-add strategy effectively. Vilas Holdings brings a proven track record to this acquisition. With over 20 years of combined experience across various U.S. markets, we have successfully managed similar multifamily assets. Our status as an accredited Freddie Mac client and our professional underwriting standards provide a built-in execution edge. The property is located on Richmond Road in Texarkana, a location that offers strong access to daily needs, local schools, and institutional anchors. The market demographics, including a stable population and a significant renter base, support the long-term viability of this workforce housing community. Texarkana features a diverse employment base that helps support consistent housing demand. Key sectors such as government, healthcare, manufacturing, and construction provide a stable tenant base. This diversification helps mitigate risks related to economic shifts and supports the long-term stability of the community. The Pines at Richmond is an older vintage asset with clear opportunities for value creation. By improving curb appeal, bringing amenities like the pool and fitness facilities back online, and maintaining the property proactively, we aim to enhance both the community's reputation and resident retention. Our interior strategy focuses on steady and achievable rent growth, rather than speculative luxury repositioning. We target rents of approximately $1,095 for our two-bedroom units, which are well-sized for workforce families. These improvements are designed to be cost-effective while adding significant value to the resident experience. Amenities are a vital component of our operational plan. We are committed to bringing these community features back online to support our target occupancy of 90% or higher. By prioritizing a better resident experience, we aim to establish a competitive edge in the local workforce housing market. For an example, $100,000 investment, our structure provides a 7% preferred return to limited partners. Our capital structure is designed to align interests, with investors receiving their capital back before the general partners promote. We anticipate a 5-year hold period with quarterly distributions throughout the term. The capital stack includes an assumption of the existing fixed-rate debt, which matures in 2032. Our uses of capital cover the contract purchase price, closing costs, and initial capital improvements. This robust financial planning is designed to protect liquidity and support the community's stabilization. The return story for investors combines steady annual cash flow with potential upside at exit. Over a 5-year hold, we project an illustrative total return of approximately 82%. These projections assume a successful exit at the end of the term, though they remain subject to market conditions and operational performance. We are transparent about the risks involved, including the older condition of the property and market factors like rent ceilings. Our objective is to identify and manage these risks through prudent planning, ensuring that we prioritize capital preservation and stable cash flow for our investors. Our risk mitigation strategy relies on conservative underwriting, strong debt coverage, and experienced local management. With robust reserves and a clear, flexible exit plan, we are committed to protecting investor capital while delivering on our operational goals for the Pines at Richmond. To ensure success, our execution plan follows 5 clear levers. First, we will stabilize occupancy to 90% or higher. Second, we will implement gradual rent increases on renovated units. Third, we will improve curb appeal. Fourth, we will bring amenities back online. Finally, we will maintain strict control over repairs, maintenance, and vendor costs. Our exit strategy is structured around a 5-year hold period. We will stabilize operations, execute our value-add plan, and optimize net operating income before preparing for a sale or refinance. While a year 5 sale is our primary exit, we remain flexible to consider early exits or portfolio sales if market conditions are favorable. We prioritize investor transparency. You can expect regular quarterly financial reports and distributions, annual K-1 tax documents, and ongoing property updates. We also hold biannual investor calls and provide immediate alerts for any material events. Access these resources anytime through our secure investor portal. This is an exclusive investment opportunity with limited availability on a first-come, first-served basis. We are targeting a closing for September 15th, 2026. If you are a qualified investor, please contact us today to secure your allocation and review the full offering documents through our portal.
All right. That was thank you for AI for creating that. But I would love to go to our presentation that we created by ourselves, and we know all details. So you will have options and opportunity to ask any questions, and we'll save a little time on those slides that we already saw, and we'll do this more or less. Right now, I can see 3 team members present on this presentation, so you can ask any one of us about any questions. Let me just start sharing the screen, and we can go to slideshow. All right. Okay. That's what we have. We have 60 units in Texarkana, and it's all the vintage is about 1965 to 1981. And it's a great opportunity in the way that it presents really value add to our knowledge, and that's what we basically doing here. I don't want to spend too much time on legal disclaimers. We're just saying that we're not accountant, we're not lawyers, and this is for information purposes only. And everyone should do their own due diligence of this presentation. Now, I would like Alex to start doing why do we have our unfair advantage? Alex, please.
Yeah, sure. There's 2 pieces. Number one, we do have existing property in Texarkana, which is 22 units. We bought it, we closed in end of October 2025, and been able to do distribution to our limited partners from the first quarter. And we have great management in place. And also we occupied, and we can also... Is it me?
No, you're good.
Good? Okay. So yeah, as I mentioned before, we already have our presence in Texarkana. We've been able to distribute to our limited partners from the first quarter, and AAR over there is 21%. Also, about 60 units, we have a really great location over there. It's 3-minute drive to the one mall, another 5-minute to the hospital, as well as we surrounded by the 4 banks, UPS next to it, and 2 pharmacies literally right across the street. As well as the way we did acquire that property, it's our great relationship with the commercial broker, the same person who gave us a chance to buy that beautiful 22 units, and now we're acquiring the 60.
All
And
right.
one more thing about our management. Our manager, Denise, she'd been in the property already with the contractor and was very impressed. And the pluses, it's a, as she mentioned, great location, interesting property. And the second thing, it's under the poor management and existing poor management. So we're planning to put in place our great manager, Denise, which is handling our 22 units. Roman, please proceed.
Yeah, so and by the way, Denise is here with us today. If she wants to say something, very welcome. If Denise, you want to add anything to this at this point, or you will be waiting until people will ask you questions?
Yeah, they can ask me questions.
Yeah, okay, thank you.
I'm excited. I'm excited for this challenge.
Yeah, as we said, that's what means when we have good relationship. If we wouldn't be having good relationship, management will never show up. And
Right.
we have our joke doing our weekly meetings with management. We created our own like a stereotype. Let's just make this investment boring. So it means I don't want to see you, you don't want to see me. Everyone makes money and it's nobody really cares about what's going on. But we're not at that point yet. And every time we're meeting our management, we're asking Denise, are we already boring yet? Are we already
Yes.
bored?
Yes. Yes.
So
Time for a new challenge.
all right. Great. Okay, so a little bit about team members. My name Roman. I'm in full-time in this business since 2005. Before that, I used to be mechanical engineer, and after that, I was computer programmer. I was doing single-family properties from 2005, and starting 2017, me and my partner in NASA, we joined multifamily communities, and we never to look back from that. So we have more than enough experience in doing analysis, underwriting, talking to particular broker, negotiating the price, and all of that. So if anyone has any questions and want to share, I'm ready to share any knowledge that I have on my side, like every one of our team members. Alex, please about yourself.
Sure. My name is Alexander Kislitsky. I'm managing partner of this great team. I've been a real estate investor for the full time the past 9 years, and have over 18 years experience the property related. I've been a general contractor for 7 years. Also been working for one of the biggest construction company in Manhattan doing superstructure for 7 years. I've been managing 42 unit apartment complex in Brooklyn, New York. I've done over 14 single families, the complete ground up development in state of Pennsylvania, and also over 26 fixer uppers in the state of New Jersey and Pennsylvania, and been doing the multifamily for the past 4 years with a great team, with the Roman and team and Inessa and Sergio. Pretty much it for me. If you have any more questions later on, you can ask. Let's proceed with our great presentation. Roman, go ahead.
Thank you. Inessa, please introduce yourself.
Yeah, I will put my 5 cents here. My professional career, yes, still in corporate world. I'm working for one of the biggest bank for JP Morgan, where I have experience in investment banking, in risk management, compliance management. But my passion lies in real estate. I've been with Roman in single family starting in like 2017, and we was thinking how we can scale up. And actually, the reason we are doing it today because I pull Roman in to multifamily when I see the opportunity in end of 2017. I pulled him in, and since then we are here. Yes, doing business with Roman from, I would say, 2018 in multifamily space. Yes.
Okay, thank you. Thank you very much. Two other team members are not here today. Tim
Robin?
Lawless, he is in Texas. He has his 9 to 5 job. He kind of local, relatively speaking. He lives in Houston, just 5 hours driving distance, and he has a significant amount of properties under his belt. Sergio Menina is our broker, one of our team members. He is actually a broker in Pennsylvania. We have a couple properties with him as well, and he is full-time in real estate. All right, so that's our track record shows that we basically know what we're doing in the terms of size of the properties. As you can see here, we already have experience with different sizes between 24 to 60 units in let's say here it's Illinois. We didn't bring up on this slide our Texas property yet. So combined, we have more than 20 years of experience with different in different states, Pennsylvania, Illinois, and Texas. What is important, we never had a capital call, so we never asked our investors to put extra money besides what they already did. We have experience in all aspects of real estate and multifamily. We have strong underwriting skills, and also what is also important, we accredited Freddie Mac clients. So it means that loan assumptions will be simplified because they already know us. It's the same company doing a loan for this is CBRE. We already have the same company doing our let's say 24 units in Burnham, Illinois. Given a little bit about the market itself, the city is about 36,000 people in Texarkana with MSA population about 146 and median income household income around $50,000. That's what we like because it's like a good basis for people to be able to pay the rent. Medium 2-bedroom apartments, as it shows on Rentometer and other apartment.com properties, it's averaging $1,095, which is great way of renting it to this level. Crime goes down about 18% year over year. And it's like every city, it has own crimes. Like I don't see anyone. I don't know any city that doesn't have crime, but it goes down. That's important one because everyone we live in a different world, and AI is basically things that scares a lot of people, and especially in multifamily. And it shows this particular market has a strong resilience to the AI influence, which is government has about 12,000 jobs, educational about 9,000, manufacturing about 6,000 people, and in construction about 3,000 people. Also, from what we know, and Denise can prove it, it's been not a decision, but a plan for $3.5 billion to put AI data center within Texarkana borders. People in Texarkana don't like it.
Correct.
Correct. If you can say anything about it, yeah.
Yeah, I know they're looking at putting one around the Hooks area. Out in Hooks also is the Red River Army Depot.
Yeah.
I don't know if that's in your stats also, but they're looking at putting one out there. I know people are not happy about it. So I don't know if that's a confirmation it is coming or not.
Yeah, it's still in debate, and from what I know, Texas put moratorium on putting data centers on entire states. But if it will happen, it will not influence a lot of permanent jobs. It will create just about 120 jobs as a permanent, but it will create about a few thousand jobs as a temporary positions for next 20, 30 a month. but it's still in discussion, nothing concrete. But in any case, the market is strong without AI. And
Correct.
even with AI, it doesn't affect it too much. Yeah. Denise, you want to add something?
No, you're good. Thank you.
Okay. So that's what we're looking at. It's a garden style property. And maybe Alex, maybe you can take over from this point.
Yeah, sure. So basically, what we're looking in here, we got 60 units. There is a certain there's an interesting part about this property. We have a garden style apartments, which is literally like look like the house with the personal backyard. They're very big. It's like two bathrooms, as well as we call them the quadplex. We have three of them. Also, we have those two bedroom, 1.5 bathrooms apartment. They literally did attached townhouses, and this is kind of unique because you don't really see too many of them in Texarkana. So at this point, we do have a little advantage over the comps, as well as we have the swimming pool on site and little gym area slash laundry area, but we probably gonna convert it to the laundry area because not every apartment in this multifamily has a washer dryer, but around 30 of them they do have it. The rest could be using the laundry machine, the coin laundry machines. At this point, we looking to do little improvement inside the apartments because right now we have Roman. How many we got vacant at this point?
At this point, we have 14 vacant units,
Great.
and Denise basically walked through a few of them with the contractors, and they gave us a preliminary quote on the construction. It's not really major renovation that needs to be done, so it can be done relatively in fast matter. As long as the contractor has the full scale of job, he can buy a lot of materials, store it in the storage area, and that will be cheaper for everyone, and it will be faster. One more
Sure.
thing, this property has unique feature because quite a few two bedrooms. It's a two-story apartments, which is not usually the case that we saw before. If Denise can say, her contractor is good and we like him and we love with his quality of job and we trusted his number.
Yes. He's got a crew that can go in. We can give him a job for 2 or 3 units and he could probably be out within a week.
Yeah. So that's a good starting point for us to start renovating and renting it out and bring it up to the 90+% occupancy. That's what it looks like. The pictures taken basically from apartment.com that current management using to rent it out. I have to say again and again, the current management doesn't do any job at all, and it shows. And it's not really what they specialize in, and they don't really know what is where. Denise had problems even getting to apartment because they didn't know which one is vacant, which one is occupied, which is interesting.
I would add something. We being in that property last week, me and Roman, we've been doing inspection of all units with our inspector. We went through all of the units. We created a video in each and every unit, and we also going to be able to share with the people who is interested to dive in this deal. Everything was created by using the video glasses, so everything nice and clear. And when the management showed up over there, she was very surprised that 14 apartments being vacant. That's
Yeah.
basically gives us idea that the problem with this great 60-unit apartment complex is the existing management company.
Well, if I can interrupt on that, I don't remember when I went over there, what was that, 2 or 3 months ago? I believe
Yeah.
it was the same number of vacancies when I went over there.
Yeah.
The
So they
interesting part
didn't touch it, they didn't do anything, it's still garbage there. So they
also,
didn't do anything.
yeah, also I've been talking to the manager who lives on site. She actually rents the apartment over there. When we were opening one unit, she was like, "Oh, it's vacant." I was like, "Wow, yeah, I
So
see that." Since when it's been vacant? She was like, looks like, hold on, let me check something." Then she called someone, "Oh, from February."
from
I was
February.
like, "Oh, that's great. It's August."
Yeah. We have to say that all 60 units are comprised of 2 bedrooms. The only difference between them it's the size and number of bathrooms. It has between 1 to 2 bathroom altogether. But all of those units are 2 bedrooms. That's the look from the community area, which has the pool house, which is not used at all. And we think maybe we can do something about it. Maybe we can just make it as an office. Maybe we can keep it as a pool house, because the property itself has an office space. We can either keep it as an office, just fix it a little bit, or maybe we can convert it to 1 bedroom or studio apartment as well. So we're not looking for any crazy stuff. And what we're trying to buy is a stability. So we're doing just annual 2-3% rent growth, and we can bring property to 90% occupancy, and that will be great cash flow to everyone who will be on limited partners on investment side, as well as we're not going to work for free, so it will give us opportunity to have some cash. All right, and that's if just example of how $100,000 will look like if you want to invest about just example. Alex, please explain that in simple terms.
Sure, absolutely. Our overall the price we purchased in the property is $3,250,000. So what we're doing, we're raising capital of $1,300,000. That's basically our 20% down payment, closing cost, and acquisition fees. The split goes in a deal 70% to the LP limited partners and GP, and 30% to general partners. We basically on our conservative assumptions, we see, for example, if you invested $100,000, you get a preferred return rate. It means cash return, 7% a year. So if you put $100,000, you get a preferred $7,000 cash a year, plus you have another 13% equity position. Equity position, it means it's $13,000, and since we're buying it for 5 years, we're doing just a simple calculation. It's a 7% cash and cash return plus 13% equity, so around $20,000 making a year. For 5 year period, it's another $100,000. So at the end of the 5th year, basically you getting your $100,000 back, the original investment, and overall for 5 years you made another $100,000.
Well, yeah. But if it's still confusing, the next few slides will show that visually in numbers. So that's sources and uses. That's how we're gonna use the money. We're gonna we have existing loan on $2.256 million, which is a assumable loan. We invest raising capital for 1.3, The closing cost is about $200,000, which is included. Loan points, acquisition fee, and we included initial CapEx, capital expenditure amount of $100,000. We think it's enough to fix the 14 units. And if not, we will be using cash from the existing cash flow. But from what we know, it's between $5,000 to $7,000 average for each unit to be made rent ready. The bank also asking for operating reserve that we have to show before closing. The loan is at 5.53%, which has another 6 years of interest-only payment, which is great because it's allowed us to pay our investors after first quarter. The first quarter we will be using to renovate as many apartments as we can and rent it out as we can. So that's another slide that actually shows what Alex was explaining. If you will have 100K investment for 5 years, you will have $35,000. After that, we think that we can exit in 5 years at the sell price of $4.5 million, which is conservative, 7.5% cap rate. We will cover the loan. We will have receipts of $2.17 million. We will return the capital of $1.3 million that we took from the people, and we will share the 70-30 splits and remaining $600,000+. So which brings us to 5 years total return about 82%, which equal to 17% annual. We do understand the risk with this one because it's a little bit older property. We can see vacancy, but we think that we did conservative underwriting using 14% year over year, even though that we claiming that we can bring it up to 90%, but our underwriting shows a little bit less than that. The problem with the investors, like any real estate, the money that you put in it are not liquid. You cannot ask for money to be returned in 3 months, and that's the risk. You will have to either wait a little bit until we will find a replacement, or you have to find a replacement for person if you need money really in timely manner. How we do mitigating risk? Most important box here is number 8. We calculated that break-even points, which means that break-even. It means that property produce enough to cover all expenses, meaning management fee, repair and maintenance, mortgage payment, insurance, and taxes. So that 68% can show significant confidence that we can be able to pay our investors even day one. The way how we're going to perform that, that's our plan of action. We will stabilize the property. We will do the graduate rent increase year over year that we have already experienced with another property, and it's doesn't present any challenge. And 3% people not going to move out. We will improve curb appeal, amenities. Maybe we'll do the pool to operating. We don't know yet, but it's one of the items that we're still debating. Worst case scenario, if we're not going to be able to use the pool because the people don't want to use the pool, we can cover it and make it like a playground for the kids. And having already experienced again and again, we're coming back to the management. Again and again, our cost of repairs is about 30%, which is great. The expense is about 30% over the income. We have different exit strategies. Either we can sell it in 5 years, or we can refinance it if market will present the opportunity. If the interest rate will be around the same amount, 5.5%, we can refinance it, or we can sell it as a portfolio with our existing 22 units. how are we gonna communicate with investors? We're not gonna take your money and run away. We're usually good. As you probably heard, we're doing our weekly management call. We're communicating with our investors on a quarterly basis. Last time we were sitting with Alex on the Zoom call for after like second or third quarter, and nobody was showing up, and I was surprised that no investors did show up. And basically, we agree that if people satisfied and they receiving their money, they're not interested in any details. If any problems will arise, they will wake us. They will give us a call at night. So that was a good sign. So everyone will have a K1 as a tax return. We'll do all kind of possible illegal moves to minimize the taxes for the people using cost segregation and all that stuff that we can discuss separately. That's pretty much what we're looking at. The minimum investment, we're looking for $50,000. If anyone will be interested, you can scan the QR code, or you can take this picture for yourself and you can send us additional information, additional requests. That's our email addresses and phone numbers. As at this point, I would like to hear all the questions that you might have. Hopefully, we have a lot of them, and hopefully, we can answer. Not hopefully, we know when we can answer those questions.
Sure. Before we're gonna proceed with the questions, we also would love to explain how we making the money and what we put in the deal as well. Because from my understanding, I really think people interested in what we put in the deal already. Correct, Roman?
Yeah, of course.
So yeah, we already on the due diligence period, and we already transferred $30,000 our own money. Also, we already spent $5,000 on inspection, as well as $9,000 on lawyer fees, and pretty much it for now. But also we doing application for loan assumption of existing wall, which is gonna be around another $15,000. So we literally all in for 65 grand. That's our skin in the game, and the way we making the money. We also have a cash flow from this property as well as equity position, but our money gonna be distributed after limited partners. So for our perspective, limited partners, they getting all the distribution first, and then general partners getting distributions. Also, we have 3% acquisition fees in this deal.
That can be turned back into the property as well.
Correct. It will be putting our acquisition fees back to the property. Correct.
And one more expenses that Alex did mention, that the FEC private placement memorandum and formation of LLC gonna cost us about another $15,000. Or maybe less, because we negotiated a good price. And I will stop sharing. And I can see that Deonta has a question. Please, go ahead.
A beautiful presentation, y'all. Roman, I joined after you were talking in Matt's call this afternoon at 2 Eastern. So
Thank you.
I'm also coming from an engineering background. I'm still actively in it. I'm an electrical. Got to compliment the logo first off on y'all's background. A very good team set up. Wanted to talk a little bit more about the delta of what the current rents are to where the target of it was just shy of 1,100 post renovation. And as I understand it, from now to acquisition and when y'all have control of the property, to get all of the vacant units renovated, get up towards approach 90, if not exceed 90. But if you can talk more about that, please.
It's an excellent question, because it comes back again to the mismanagement. The average rent on any of those two bedrooms in different size, I would say around $800 right now, between $8 to $825. So, and they'd never been raised for last thing that I saw for rent roll. And basically it's open up the opportunity to, even if you will do 3 to 4% annual, it's an extra $30 per unit. It doesn't turn them to move out, because
Right.
few things, because it's location, location, and location. That's a prime location. I would say, if Denise will concur that, it's probably, if not A, but B plus maybe, because everything is there across the street. It's a huge mall. It's within 5 minutes to the Texarkana College.
Yes,
And
it's a great location. It's hidden. You really don't know that the apartments are there unless you know you're going there. The mall is across the street. There's banking across the street. The Texarkana College is down off of Robinson. Texas High School and Middle School is just down another street. The large part of shopping is on the other side of Richmond Road. If you just go down Richmond Road and over I-30, it's a prime location. It's a really great location.
yeah, and it's a next door CVS, and if you will go to CVS,
Yes.
you're not gonna even notice that if you're not looking for that property. And there's no signs, as simple as that. As there's no signs for rent at the entrance, so
Nothing.
nobody really knows what the hell is going on there.
Right. And so then there's a curb appeal play too as well. So a good bit of loss to lease, or a loss to lease just in the current condition, and then plus throw in the light renovations that y'all were saying to get towards y'all's 1,100 number.
We love those, because if someone making mistakes, we can pick it up and we can analyze and we can benefit from that.
Excellent. Well, hey, thank y'all for inviting me to the presentation. Beautiful pitch. I wish you all the best with this.
Thank you, thank you very much. Thank you.
I can also, at the end of our presentation, once we're done with the questions, I can share a few videos when like the time we did it during the inspection.
That sounded great. And y'all said that you had like the Meta glasses to
Yes.
record walking through. That's pretty sweet. Pretty slick.
Yeah, that's helpful.
Yeah. He likes
That's
those
helpful.
toys. He likes this toy.
Yeah.
Probably some of you already saw that I published it on Facebook, the general idea of where we are, what we're doing during our inspection. It was 104 degrees all these 3 days that we're doing that. And it was us, it was current management, and it was three contractors, three inspectors doing one after another. So
Yeah, they
We did-
inspected the
we did
roof.
termite inspector. We did termite inspection. We had property inspection and sewage inspection as well. All right. Okay. Anyone else, please go ahead.
And I get it, but
Hi, Roman. This is Boris.
Hi, Boris.
Thank you for having me at this presentation and sending me an invitation. I just have a quick question. What will qualify me for a general partnership?
You have to have a specific role. If you have any knowledge in multifamily, that's number one. Or if you can raise capital, let's say you're raising about $500,000 and you don't have specific license to sell securities. By law, you have to be part of GP. So you're raising 500, you get in your percentage, and we can talk about that percentage. And you will have a role as a GP with an assignment that we can create to you, because you cannot be just sitting there doing nothing. That's the essence of getting to the GP side.
So 500K is the minimum to qualify
I'm
for.
just giving the example. For let's say for $50,000, you're not going to be in GP. That's for sure.
But you also mentioned some qualifications, having some licenses pertaining to this.
I believe that you don't have the license of to sell securities. You're not.
No,
You're not professional. If you're professional capital raiser, yeah, that's a different story. But if you're not professional capital raiser, it's raising legal questions. How and why you're doing this?
Boris, it should be a broker-dealer license, and if you're having it, you would be aware of it. So that's
So-
specific.
So there's some conditions that you have to meet to become a general partner.
You have to bring significant amount of money, or you have to have specific role that you can do.
So if I bring $500,000 into investment, I can become a general partner without other qualifications that I just
Correct.
mentioned before.
Not because you want to, because you have to.
No, I understand that. Yeah. All right. That's all I have. Thank you.
All right, no problem. Anyone who wants to become general partners, it goes to everyone. We just need 2 people for $500,000, and basically you can have team of 5 people in general partnership. I just have to mention that our existing investors already soft committed, so we have about $300,000 to $400,000 of soft commitment, and they just waiting to put money in the bank. And once we'll create the LLC, then we'll have, even if you want to put money right now, we cannot take it because we have no place to put it in. So we have to create LLC to that. All right.
So at what point you're gonna create an LLC?
Next couple weeks.
It's in work. It's at work with a lawyer
Yeah.
at the moment.
The creation of LLC, it cost us about $1,500, and it's local Texas lawyers that will do that. And they're also doing PPM, private placement memorandum, for another $9,000.
That's syndication.
For syndication, right? And
What is syndication?
that's what we're doing exactly. Syndication, it's a word between general partners and limited partners, people who doing who finding the deal, who doing underwriting, who negotiate the price, who getting financing. That's a general partnership. Who doing day-by-day operation with management, who hire management company, who following up with asset management, which is also part of expenses and part of our work. And that's what general partners. Limited partners is a passive investors who just put in money in and having presence on all our meetings. General partners usually making decisions, but they listening to limited partners. That's why we would love to have at least one investors with $1.3 million, but it creates problem because the person who might have $1.3 million, he will be the boss of general partnership, and he might dictate what to do and what not to do, which is not right.
So I have a real estate agent license.
It doesn't help.
No?
No.
Okay.
It's not a broker-dealer. It's different license.
We all have that licenses. I have license. Alex has license. Sergio has license. So we all have licenses. It's not
so only the broker's license is.
No, you don't have to have broker license. You have to have special relationship, like Inessa saying. It's FCC license.
FCC, yes.
To sell securities, you basically selling. You trade in money. It's like a stock market.
Okay.
Yeah, I don't understand why do I need to have an FCC license?
No, you don't need to. You don't need to.
No.
And
what?
Can I elaborate a little bit on it? Why is the syndication? Because the deal is getting out of hands when it's like regular, I would say, venture capital, right? We have investor, we get general partners. What syndication do? It's actually establish that property as, if we will talking about stocks, it's security. Okay, that's why it's regulated by SEC, and that's why if you don't have it, but if you have legitimately have license of broker dealer and you can trade security on the market, so it might be conflict of interest when you will join the venture, and it should be handled a little bit differently because you don't have it. It's not a requirement to join the partners, definitely not. But syndication is next level of investment when it's controlled by SEC, because if we are talking about that, investment could be in different. It could be has a different how it. I'm sorry, guys. I am like my brain is freezed. But think about it: is when you're trading a stock, when you syndicate, your property become kind of stock, not public, but that's why it's subject to SEC control and regulation.
The syndication is just a form of that organization. It can be fund of fund, it can be syndication, it can be different thing. We're choosing the syndication for this purpose that we just talking about for last hour.
So you're regulated by FCC, your venture?
You need to be compliant with SEC because
And all those documents like PPM and all those has to be recorded. Yeah.
Okay, thank you.
You're welcome.
All right. Anyone else? Please, we have chance. We're doing this presentation every Thursday at 7 p.m. So if you have no questions at this point, you can always ask them at next time. And we will be happy to answer all those, all of your questions. And we will be happy to have you as a partners. You will not regret. I know that you will not regret. We know what we're doing for last years. Otherwise, last 20 years. Otherwise, why we would be doing that? Okay.
Also, since no one is asking the questions, I'm going to be asking the questions, on the behalf of all the people who are sitting in this great room. Because I do understand that sometimes not each and every person comfortable to ask the questions in public. And I have a great feeling that people have few questions regarding the property, regarding the money. So I'm going to be talking on the behalf of other people because I actually got a few text messages already. People have been asking me to ask a question. Okay, that's fine. What if everything's gonna go wrong? What's our break-even point? And we're gonna be going back and forth with Roman, right, Roman? What's our break-even point?
Let's not to spend too much time on the questions, but yes, I did point it out during presentation. It's 60%, 68% occupancy, which means that we're not what it means. 68% occupancy with no rent increase for next couple years, 2 years. It means that we will be able to pay all the dues, taxes, insurance, mortgages, and management, and repair and maintenance, but nobody will get any distribution. That's the break-even point.
Got it. Also, I want to add it up that right now the property is 78% occupied and 32% vacant. And as well,
23.
Yeah, 23%. And I can share a few videos. Roman, can you let me share my screen?
Sure. You can start sharing.
Okay, great. I'm gonna already set up a few videos I can show regarding this
Let's just not overload people with anything.
Sure.
Yeah.
Which one? Can you see it?
Okay. Go ahead.
Okay,
Yeah.
great. The first of all, I want to show the sitemap. Can you see it? Should I make it a little bit closer?
Yeah, make it a little bit bigger. That's all.
Oops.
Okay. Yeah. Yeah.
Okay, great. So that's our property. That's a 60 units. In here, You see when I put in like a green, that's a two-story townhouses right here. In here, that's townhouses as well. There's another townhouses, and that's quadplexes, the biggest apartments over there. Also, they call them garden houses. Right here we have another. It's not a townhouse. It's literally second floor apartment, first floor apartment, second floor apartment, first floor apartment. Right here is the pool. Right here is the laundry. And let's move to the few videos. That's basically I'm gonna be showing one of the garden houses. Hold on.
Not all of it, because
If you don't mind, I'm gonna be recording it, okay? Do you mind if I record? Thank you. She has two dogs.
Oh, they're sweating.
104.
Extra benefit, losing some weight.
Yeah. Okay, just a little.
That's how Roman checking it. We literally checking everything ourselves as well, besides the inspectors.
Those garden ones were nice.
Yep. High ceiling, all good stuff. You can meet the dogs on the left side. Yeah, actually, what I'm doing, I'm just checking all that electrical outlets to see if there's the JFCI are working there, if they're working, if they're operable, if there's any copper wiring, all of this.
Yeah, and these units have fireplaces. So
Yep.
that's an extra feature that is very nice.
Yep. We cannot hear what she's saying, but she's basically saying that she has two dogs that she adopted.
Yeah, that's a garden apartment. You know, Denise, you like it, right? Oh, you did see the garden apartment, correct?
I did see one garden apartment, yes.
Great. Now I'm gonna show you. Hold on, let me see. What's that? That's one of the apartments, like one of the first floor apartment.
Yeah, I've seen one of those. And I've seen one of the townhouses.
Some of them are in better condition, some of them in good, but we cannot tell people how to live.
No.
Like I'm basically putting everything down, you know. That's how we do our underwriting corrections.
That's the point for negotiation with the current sellers anyway.
It's a two bedrooms.
Mhm.
The ones upstairs have balconies too.
Yeah.
They're all good. I don't know, we like it. Now let's skip it, go next.
Yes. And there's one more.
Alex, you was running on energy drink, I guess, because it was too fast.
No, actually,
He put it on extra speed, right?
put it
Okay,
New
faster. If you
toy.
slower, I can make it slower.
No.
it's okay.
That's
It's
the
okay.
apartment with the backyard, which is great.
That's another garden. That's a really good condition. Hi, how you doing? Good. Hot. You want me? No? You sure?
The people are friendly, they let us in, nobody was fighting, and no rejection whatsoever.
apartment. It's like, oh, that's not, I was surprised.
That's a good one. Actually, this person, from what I remember, she lives on subsidies.
Yeah.
And keep it apartment. She lived there for years,
Make sure.
and she keeps it in nice shape, really.
Mhm.
You can see washer and dryer in apartments. You can see decent size. She's telling us about the small problems that she has. All that. Okay. We can move to the next one.
Got it.
All right. So people just tell us if it's enough.
You want to see more? I can show more.
No, that's okay. I don't think that you have to go through whole gallery. It's 60
as well.
different pictures, right? All right. Okay. Anyone? Last call, because we're holding this already for more than an hour, and I don't want to hold people if there's no reason. Okay, guys. I'll stop recording. And